Hey, good afternoon, everyone. Futures Brizio here, 2:30 p.m. on Friday, November 8th. Hope everybody's had a great week. And as always, like I say, please hit that like button before we get started. Subscribe to the channel if you're just watching it for the first time. And any questions or comments, please leave them down below. Really appreciate it. But, like I said, at least hit that like button helps build the channel and helps the YouTube algorithm. So, without further ado, let's just jump into what we ended up doing today. So we'll start on the S&P here. And as you can see, this thing just keeps running up. And again, it's not a market I actively trade, but I do look at it just for kind of the fundamental underpinnings and kind of what the feeling is on the economy as a whole. And again, since the election earlier this week, the market's feeling pretty confident. Um, with the incoming Trump administration in January. So that's why we're seeing this big rally to just continue what was already started. I mean, the market was already quite bullish, obviously, but we are continuing to be at all-time highs. So we have nothing to compare it to in terms of supply levels or resistance levels. So the only thing we can really go by technically is just market structure, and we continue just to hold market structure. We had this one I had drawn on here yesterday here on the hourly chart, and now I guess we could probably put this one as the latest swing. So again, as long as we hold these levels and we keep pulling back, then there's opportunity for longs here. So on the 5 minute chart, here was that last pullback that happened during the overnight pre-market session. Let's see, this was around 7 a.m. this morning, so a couple hours before the North American session. And you can see we quickly came back here. And really, probably anything above this high was a good entry on the 5 minute chart. As we came up here, then this was a little pullback. As soon as this structure was broken, so basically around this candle right in here, right anywhere right in here would have been a good entry. And we've just been going up ever since then. And there's been no change, with no structure breaks. And so that's that. So S&P continues to roll. All right, on to natural gas. As I mentioned yesterday, and I had this box drawn on the chart, it does appear that we may be entering into a consolidation time here on NG, and that was further confirmed today. We did have price try to shoot up, got about 2/3 of the way through the range and came back down. Broke a little bit lower than this internal low here, but it kept this low easily. So natural gas is, I consider this to be range bound. This is the hourly chart. So I'll be looking for some kind of move out of this. But as long as this is range bound inside of here, I'm probably not really interested in trading it. Although I do realize the market is fractal, right? So a sideways motion on a higher time frame, can be a trending market on a short time frame. So even though on the hourly chart there's nothing impressive here to trade because it's very sideways, down on a 5 minute chart like this, you could potentially get some trades in here, within this 5 minute range, if you so choose. Even on the 15 minute, it looks really choppy and range bound. So there's really nothing here to trade unless you really go short on the time frames here. And even this is really tough because when you get down to these low time frames, you see all these gaps on the chart because there's just not a lot of volume, enough volume in price action in terms of buys and sells within here to really fill in all these gaps. So you have this kind of scattered look chart, which is going to be more pronounced on the shorter time frames. So one of the ways you can get around that potentially is to either use a line chart. If you choose to trade on these time frames, you can put your line chart on. So like for instance, right here, with this shift to the downside, we had this push up. And then, right here, we had this break of structure right here. If we put a line here. So we had this right here. Whoops. Yeah, it's because there's a wick down there, so it's trying to line it up. But anyways, you get the point. We broke lower, and then it shot up, retraced off of there after breaking structure, pulled back, and then obviously anything in here would have been a good entry to the downside, and we've kind of held that ever since. And so from a standpoint of structure to the upside, really wasn't broken. I mean, you would have to look at maybe like this area right here to be broken for this uptrend, because there was a little swing right here, but it didn't lead to a new low. I don't think. No, it didn't. So, so this uptrend right here, you do have to consider this to be a correction to a downtrend. But, and again, you get structure right here. So you can, you have to use kind of all these little internal structures to kind of figure out where you want to enter. So you can use a line chart on these really short time frames if you run into this situation where you got all these gaps on the chart, or you can use like a Heikin-Ashi chart. That's another option, because a Heikin-Ashi chart will fill in those gaps like this. So this is another option. If you don't want to use the line chart, you can still see the breaks of structure like you were talking about. You can see it here on this wick. So that's another good option, is just to use an old-fashioned Heikin-Ashi chart, and you can trade these lower time frame moves within these consolidating markets. So if you choose to do that, that's fine, or you just don't trade it while it's inside of a range like this, and you just let the market play out, if you're not into trading on the really short time frames. So you don't have to trade it. You can just wait until the market reestablishes the trend in whatever direction it wants to go, and then you look for trades then. So, but that is a way to play it if you, especially it's important, I think, if you only trade one or two assets. And, if you're in a consolidating market on a higher time frame, you could potentially go days, weeks without a trade. And there's nothing wrong with that. But, if you like to be in the market at least sometimes, then your only other option in these cases is to trade on a short time frame. But of course, that's, can be more risky, because the lower time frames are definitely not as, don't produce as good as signals. And to me, the risk to reward sometimes not worth it. You have to almost really load up on contract size in order to make those small moves worthwhile on a short time frame. And that's, to me, is not always worth it. So, but, it's a choice you have to make. And like I said, in a sideways market, that's your only option. So, is either wait or trade it on a small time frame. So, where you can see some, market structure and trends. And then just use the higher time frames for, boundaries, for structure levels, until the market proves that it's going to break through one of those levels. All right. So on to crude oil. So crude oil, again, on a little bit longer, 30-minute to hourly time frame, we traded right down into this last area here where we had this strong reaction off this level, which also, if you look further to the left over here, filled in this gap that we had almost 2 weeks ago now. That was that Sunday gap that we had 2 weeks ago this coming Sunday. And so the market went down there, filled that gap, and then shot up. And then we went up. We did make a new high, came all the way back down, retested it. And now, we'll see what happens. I still have a fairly bullish tilt to crude oil, just fundamentally. You can see I've just got this little line and arrow here. It's just my own little notes and analysis. We bounced off here, came back. So if we can take out this area right here, this is a little 10-minute structure or 5-minute structure on a short time frame. We can go up here and take this out. Then I do think we probably will turn higher, which would line up with the higher time frame bounce off this demand area. So, so I do remain bullish at the moment on crude oil, as long as this zone holds. If we do get a break, below this low over here, basically below this rectangle, then that would be voided. Although there would be another area down here back at this low, but essentially this structure would be broken, and maybe you see a longer downtrend continue. But even on the higher time frame, on the 4-hour, we are technically putting in higher lows and higher highs here. So I do consider this to be bullish. Obviously, this time of day on a Friday, you're not going to see anything else happen here. Market's just going to go very small ranges for the rest of the day. We're a couple hours from the close, but we'll see. But that's my kind of my outlook on crude. And here on copper, so I'm in a very small trade here, which is in drawdown right now. This was a trade I took essentially off this 5-minute zone. I do remain bearish on copper for now. I do think, more longer term it's bullish, but if we zoom out here, we had this big break. Remember below that big structure area we had, price came down, took out this area, retraced all the way back up, and then started heading down again. This is probably like a 78.6 retracement level. Yeah, that's exactly where it went to up here. This was 78.6 fib retracement of this move down. And so I do think, a good short-term target is probably back at these lows, back around here. And, we just have to, this is kind of the swing area I'm looking at as kind of the line in the sand kind of thing, as long as price remains below this last swing high, which you can kind of see here on the 15-minute chart. And actually, when you look at this, yeah, I mean, this swing led to this low. Although the question is, did this move down, this whole move down right here, this whole move down right here, did that originate up here? Or did it originate at this pullback right here? So that's up for debate, but either way, as long as price holds this area and potentially all the way up here, then, the downtrend's intact. So regardless of, even if it comes up further, if it stays below here, it's definitely intact. If it goes up a little further, I think ultimately as long as it holds on to, well, actually, this is probably, now that I look at this is probably a better zone. So as long as it holds on to one of these zones, then it's still down. So I don't know if I'm going to hold this through the weekend. It's a small position. I may just close it if I don't get stopped out of it. You can see I got a really tight stop on this. So, and I don't think price is going to do much else. But I do remain bearish, at least in the short term, on copper. And that's it. So again, yeah, crude oil, bullish for now. NG, neutral on NG unless you're trading it on a short time frame. And ES, if you trade this, you just can't stand in the way of a freight train. You just have to consider this is going to keep going up. So that's how I feel about that. So anyways, yeah, that's it, guys. I will leave it there. Again, make sure you hit that like button on your way out. Subscribe to the channel. Any questions or comments, leave them down below. Happy to answer those. And again, not trading advice. Anything on this channel is just my observation and analysis on what price action is done and where it might possibly go coming up. But trading is, with the best analysis, is still basically a 50-50 game. And so half the time I think it's going one way, it goes the other way. Half the time I'm right, and that's just the way it goes. So it just depends on how you manage your risk and stop loss placement, and just making sure that when you do get a successful trade, that you make more on that than you make on your losers, and that's how you be profitable, even with a 50-50 coin flip. Obviously we can use technical and fundamental analysis to help us develop our bias and make confirmations, and using market structure. But at the end of the day, the market's organic, and it's going to tell you what it wants to do. It doesn't matter what you think, and it doesn't matter what indicators you use. It doesn't matter what you draw on your chart. That means nothing. At the end of the day, the market's going to do what it wants to do, and you just have to try to be on the right side more than you're on the wrong side, or at least you're going to be on the wrong side to keep those losses small, and then you'll be good. So, all right, so I'll leave it there, guys. I hope you have a fantastic weekend. I'll be back next week, and hopefully we get some good trades. I think the market will remain active here for the rest of the year, especially post-presidential election, kind of anticipation of what will happen come January, when the new administration comes in. So I do think markets like this will remain active. And that's a good thing. It's good for trading. Prevents opportunities. Obviously, it presents risk too. So trade carefully and wisely, and use good risk management, and use your own analysis. Like I said, don't use anything that I've said on here. It's just my opinion. All right, guys, have a fantastic weekend. Talk to you next week. Thanks. Take care.